previous oil price shocks. All of them have had their own particularities, and the nature of this crisis imposes a different set of challenges. Currently, on the top of the oil price crash, we are obviously all of us working in an environment of social distancing. So what we have been seeing over the past couple of weeks, we have already seen the US oil price dip below zero for the first time in history. Now the coronavirus faces, oil companies with the worst oversupply also in history. While the short-term heat demand is likely to be around 30 million barrels per day, there are several concerns out there that the demand could be down to 10 million barrels per day eventually going forward. If I just look at some of the massive oil producing regions around the world, let's take Russia, for instance, as an example. I've had the chance to live and work in Russia. Some of the newest greenfield developments in the country are facing reduced revenues of up to $20 billion in the next 3 years. But we are here to talk about implications for business in the GCC, a region that we are, as a company, very passionate about. It's fair to say that oil-dependent economies in the Middle East and in the GCC, also in Africa, face a particularly testing time. GCC countries are witnessing twofold impacts due to the virus outbreak. The region, as you all know, is not only dependent on Chinese suppliers, just like the rest of the world, for their industrial production, but it is also dependent on China on the demand side for its massive oil reserves. So over the past couple of weeks, the lower prices have already required Gulf states to tighten their belts. Frankly speaking, even in a pre-crisis mode, we have seen IMF warning some of the GCC states, that by 2034, 2035, they would easily and could become net debtors to the rest of the world. That prediction was based on a $55 per barrel scenario. So obviously with a $30 or $20 per barrel scenario, that timeline will very much shorten. Every single country within the GCC region has illustrated certain set of vulnerabilities going forward. Now, what we can see at the moment is that because of this dual shock, the growth downgrade for the region as a whole may as well be around 2.63 percentage points in 2020. This can amount to about $41 billion just in 2020 for these states. So I guess that figure clearly represents and illustrates how severe the impact of the crisis can be on the region as a whole. On a positive note and positive observation is that the economic profile of the Gulf states is not, however, typical to most oil producing states. Most have a much lower ratio of oil reserves to population, as opposed to many large oil exporters out there that have large and rapidly growing populations as well, that have an increasing appetite for consumption, whereas countries such as Saudi or Kuwait, they routinely earn more in revenue than they can sensibly invest at home. Now, we have seen all countries without exception taking the necessary steps in the region. We have seen some ambitious stimulus packages being announced. The UAE has taken the lead with $70 billion, followed by Saudi Arabia at $32 billion. And Oman has also launched a stimulus package over the past 5 weeks of $20 billion to help the economy, to support small and medium-sized enterprises eventually. So that leaves us with the current situation, which is very much applicable for the region and for the global economy as a whole. It's clear to us, based on our discussions with our clients, that there is a lack of adequate predictions. It's very hard to say what's going to happen in the long run. For sure, in the near term, the situation and the scope of challenges will be increasing. We at the Energy Year, we do not subscribe to the idea that this crisis will be over in 6 months. And based on the feedback coming from our clients, most of them believe that operations will go on and keep being disrupted up until 2022. Now, prospects can become much more positive in the long run, though. If anything, we have seen that this crisis has started shaking up the industry. I personally has seen that in Oman and in many other countries in the GCC, how this crisis has forced companies to go on an unforeseen diet, which is eventually a good thing. As a result of which, many companies will be in a much better position to take advantage of a rebound if that happens in 2021 or 2022 in a post-crisis environment. It's also fair to say that many companies whose business model has not adapted in time to the new reality will be out of business, unfortunately. Now we are seeing two very important themes. Again, this is based on the feedback coming from key executives and your peers that can emerge out of the crisis, and these are technology and operational efficiency. And I'm going to touch up on these items going forward. Just jumping to slide 4 before we do a quick poll. Once again, I have already talked about the impact on GCC states, but if the oil price remains at around $20 per barrel for the rest of the year, GCC governments could easily lose more than $500 million a day. Again, this figure, and you can see the breakdown in between countries, can very much demonstrate how severe the long-term consequences of this crisis can be on these states, with deficits in the region rising perhaps as high as 30% of the GDP. The governments will obviously have to find ways to fund these deficits. There are certain options out there. We have already seen a combination of borrowing. We have seen certain governments drawing down on reserves going forward. And one thing that we have seen, and we expect to see even more, that's a sort of appetite for consolidation, restructuring, and asset sales. I guess it's true now more than ever before that nothing is not for sale anymore. I'm sure you have all seen Saudi Arabia and Saudi Aramco's announcement recently to raise up to $25 billion by selling up to 1.5% stake in the company's pipeline business. On top of that, Bahrain recently announced that the country would open up to foreign investors in an effort to boost state income. We have seen plenty of new blocks being awarded within Block 6 that has traditionally been a very strong producing asset for petroleum development in Oman. And we have seen many other restructurings going through the region that will eventually allow some of these states to generate more and more revenues going forward in these troubled times. Before we go on to slide 5, Sanjeev, you wanted to for a quick poll, right?
Yes, Peter. Thank you for that. To the audience, I'm just directing this to you. From what Peter has been telling so far, I'm just want to understand your view here. So I'm launching a quick poll for you, which you should be able to see now on your screen. I just need about 5 seconds of your time. If you could quickly choose an answer to the question. This is primarily to understand the threat that you foresee in your business. So we'll just take about 5 seconds.
Sure.
Thanks, Peter. Okay, so I think we are done with that. And now I'll also share the results that you should be able to see the results there on the screen as you see it now. So this is what we have got from here. So now, Peter, on to you again.
Okay, I'm just looking at the results in the meantime, and these feedbacks pretty much tie in well with the feedbacks that we have been gathering from our clients, across the GCC region, and that really takes me to my next slide. Talking about the impact on procurement and spend, which is pretty much amongst the most important challenges that companies are dealing with these days on a daily basis. It has already become evident to every single player in the oil and gas industry that they must revise their forecasted budgets for 2020, and they need to identify areas for budget cuts. So the big questions that we keep hearing is that whether the region's oil and gas sector or whether services companies in the GCC or in Oman will be able to find more room to squeeze out further cuts. Now that's the $1 million question. Many of our clients are optimistic about allocating further cuts. Some of the well-known local contractors in the GCC, even manufacturers and services players that we know very well in Oman, have started to fundamentally rethink and reduce their structural costs in a non-traditional way. They are looking into creating cost variability. They are trying to eradicating complexity by freeing up capital. So they are looking at many different ways for the very simple reason that they realize that in procurement, now more than ever before, managing information across the chain become extremely relevant. So they are trying to monitor the performance of their vendors. They are trying to prioritize activities together with them, perhaps even co-designing some elements of the project since the beginning of FEED and initial designs. And what has really prompted this approach, of course, is the reaction of some of the state-owned companies that has really trickled down to the industry as a whole. If I'm looking at PDO, which is, of course, a semi-state-owned entity, or ADNOC or Aramco, all of these sort of national champions came out already and notified their contractors of their plans to scale down spending. Petroleum Development Oman was asking their contractors to reduce contract values by up to 30%. Saudi Aramco has significantly reduced the capital spending budget that was laid out for 2020 by about $7 to $8 billion, and ADNOC has taken indeed similar measures. So overall estimates, if I look at the region, show that GCC regions altogether may need to raise up to $180 billion in 2020 to maintain current spending deficits. We already discussed, some of the ways that are available for companies to do that. Particularly in Oman, if Oman was intent on conducting additional sales, which I think will be the case eventually going forward, since the country has done a tremendous job in terms of attracting international companies, downstream assets would probably make for better candidates for a transaction, because upstream assets, globally speaking, are seeing their valuations shrink significantly. If you just look at Oman within this 180 billion that the region would need to raise, Oman needs to raise at about $5 to $6 billion this year to balance the budget. And that is why, the moves taken by Petroleum Development Oman, or even OQ, which I will touch upon later on, the new entity of the country, will play a very, very important role going forward. We have seen the Ministry of Oil and Gas making several announcements in the Sultanate of Oman over the past couple of weeks. They are looking to prevent spending from areas that aren't presently generating revenues, such as infrastructure projects, perhaps exploration activities, drilling wells and shooting seismic, and eventually focusing on currently producing assets. Now, within this environment, what sort of strategies are out there for companies to really weather the pandemic? It's fair to say that companies that have been waiting for the crisis to promote cost and operational efficiencies will be in big trouble. We are encountering a mix of clients in terms of their preparedness to cope with the challenges. There are those who have started to place emphasis on driving production efficiency, generating strong yield even after the 2014 oil price shock. They have started to embrace digitalisation. Many of the players that I'm speaking with these days, they have reduced capacity utilization, of course, due to staffing limitations. And they expect that even after the reopening of factories, most manufacturing sites in the region will struggle to achieve 50% of their previous capacity. And of course, that's very much true for the entire world. So we are seeing, based on our discussions, 3 different categories amongst our clients. And I'm not going to add the very last one, which is surprisingly enough the category of denial. Some companies have been caught completely unaware of the current situation, and they assume that things will go back to normal. However, almost the majority of the players are going down the road of either retrench, so reduce cost and spending in response to the difficulty, assuming that the fundamentals of the energy industry will quickly reassert themselves. The second major portion of companies, as you can see it on the pie chart, that's the biggest one highlighted with green. They are sort of implementing this rethink, or I like to call it reactive approach, which means exploring new ways, to integrate along the value chain, meaning they realize there's a massive crisis out there. They are not setting long-term strategies. They keep acting along as issues and difficulties arise on a day-to-day basis. And they are already looking into localizing material supply chains, supporting capabilities, on-demand manufacturing, and they are really trying to take the necessary actions without, of course, understanding what the long-term consequences of the crisis can be. So they try to take a step back, and process the information that's available. The third category of clients belong to this group that we call Repower. It's only a handful number of companies. To some of them I had the chance to talk to, and they seem to have the situation figured out pretty much from day one. Frankly, only because they have started to embrace either digitalization or certain technologies to streamline the activities even before the 2014 crisis. And they are simply implementing processes they have been preparing for a while. This category is rather small these days, and no matter which group you belong to, in Oman or in the GCC or anywhere around the world, it's clear that you're going to have to remain open to the idea of flexibility all the way through. Most of the players that we have been speaking with in Oman, typically, they definitely belong in the rethink, and some even in the Repower group. Meaning, they have started altering their structure, and they are trying to set up certain processes to be able to cope with unexpected issues. Some companies across the region have put in place crisis response and resiliency teams as well, tasked with specific responsibilities. One very important takeaway here from me would be that we have been working in Oman, as Sanjeev mentioned, for the past 10 years. And since 2015, 2016, we have seen an uptick in the Sultanate, in the number of Omani companies venturing into the exploration production business, which is obviously a major step for any services company, for any contractor. On one hand, this move has added a new dimension to Oman's in-country value strategy. On the other hand, it has really illustrated the stamina, the willingness, and the staying power of some of these local companies to grow, to take on risks, to take on upfront investment, and eventually, withstand difficulties going forward. Of course, it's fair to say that some of these companies, they went on to garner zero investment, and they failed to major opportunities, but they are still out there, and they are looking at overcoming the challenges of this crisis, and most likely they're going to emerge from this current situation stronger than some of the other peers in the region. So that's an important observation, definitely going forward. The next slide pretty much highlights.
Peter, if I may interject,
my bad.
Because this is a pretty interesting thing that you have spoken about here, especially with respect to the duration that this overall crisis is kind of throwing in front of companies. So we have one poll for that. I'm just going to launch that poll. This is to the audience. You should be able to see the poll on your screen now. The question is, what do you think, the impact of the pandemic's duration would be in relation to your business. If you could just give us your views on that, would be great. Just about 5 seconds. I've got some inputs to keep the results on for a few more seconds, which I will just launch it now.
Sure.
So that would give us a good insight. Okay, I think we have reached the end of polling. Now, okay, so that's the result that we are seeing now.
Okay, okay. That pretty much is in line, you know, with what we have been seeing,
Yes.
at least for a year or beyond a year. Most companies are definitely preparing, you know, for a longer period. Of course, it depends.
Absolutely.
It depends on which segment of the industry you are currently operating.
Absolutely. Absolutely. Over to you, Peter. I'm just stopping this result now.
Sure.
Yes, please.
You know, in a way, I would say that no matter how long this crisis will last, actions have to be taken at this point of time. And our clients, our clientele across the region, you know, they have identified 4 very important areas of opportunities that they think can emerge out of this crisis. Now, we have been talking about companies and global economies that have been affected, but it's not that everyone and everything is downsizing. You know, I'm confident that there will be exciting opportunities that are emerging while careful risk mitigation strategies will be helping others to explore new ways for growth. So to me, the most important opportunity here is definitely enhancing digital transformation and unleashing big data. And that's particularly applicable for the region for several different reasons. Those companies that have been enhancing either digital infrastructure, big data, some of them even going down the road of artificial intelligence, you know, they have a good chance to explore new growth opportunities. Why? Because they have been using digital infrastructure to address industry-specific challenges, including, for instance, lack of visibility into complex operational processes, equipment lifecycle management, you know, logistics complexity, issues that we are dealing with on a daily basis, especially during this crisis. Just to give you an indication of how big the global oil and gas big data market is, in a pre-crisis period, the big data market, of course, related to oil and gas, was expected to grow at an annual rate of 15 to 20%, and eventually grow by up to $4 or $5 billion up to 2022, 2023. If I look at the automation market, it was expected to reach a market size of $11 billion by 2023. Now, obviously, these forecasts and estimates will have to be changed. We expect to see a bit of slowdown, but I also expect to see an uptick, you know, by probably the second half of 2021, 2022, when eventually activities and everything else will rebound and companies will continue their activities. Some of the region's national companies are definitely at the forefront of digital transformation. That includes ADNOC, that has been embracing industrial transformation 4.0. It's definitely true for Petroleum Development Oman. And overall, if you just look at Oman as a supplier out there looking to enter the country, Oman has really become an incubator for advanced technologies that have set new industry standards for efficiency and innovation over the past decade. You know, by 2025, Petroleum Development Oman's production figures, 23% of the total production of the company will probably come from enhanced oil recovery projects. In that area, the country definitely stands out in the region. And in my opinion, for the size and the activities present in the country, is definitely perhaps even leading the way. It seems that, you know, digitalization overall will be very important for services companies, but I personally believe that many of the EPC contractors will have to adopt digitalization. Firstly, because in terms of productivity, the construction and the project management industry, we can say that over the past 1 or 2 decades may have remained a bit flat as opposed to manufacturing, which has really gained productivity, especially in certain areas of the GCC when it comes to deliverables and efficiency. So we are seeing a huge opportunity for EPC contractors, to enhance process efficiency by taking on digitalization. On the other hand, the other segment of our clientele that consists of refinery operators and petrochemical players, many of them, they have successfully launched pilot digital transformation processes. Not necessary end-to-end transformation, but at least all of them were able to experience the impact of digital transformation. And of course, now they expect recovery and construction efficiencies coming from their clients as well. There is one very important observation here, is that the learning curve on big data is extremely long. So many of the clients that are, sort of mid-cycle in terms of implementation and rolling out the basics of the digital infrastructure, they will be facing significant challenges. The current crisis can easily destroy the progress that they have made. For those companies that are ahead of the peak cycle, at the late cycle stage on artificial intelligence or even big data, and deploying cutting edge technologies, now this might just be their time now. They will be able to cut costs, continue operations by really deploying, digitalized activities going forward. I don't mean to talk a lot about bringing the ecosystem creatively into play, because we have been seeing that constantly, not only in the GCC, but all around the world. And I already mentioned that we expect to see a great deal of, restructurings, mergers, and, an uptick in collaboration opportunities with your peers. Some of our clients are exploring opportunities to even work with their competitors, perhaps co-design some of the elements of the projects going forward. Diversification is going to be very important. And surprisingly enough, many of the local companies that we have spoken to, even in Oman, they are considering opportunities to enter either Saudi Arabia, which, due to its size and activity, can be suitable to a local manufacturer coming from Oman or any other countries, and to develop new capabilities. And I'm saying that because Petroleum Development Oman recently announced its diversification plans into renewables, low carbon technologies, and energy management. To me and to our clients, that really offers a great deal of opportunity for services companies to develop a new set of capabilities in these areas, and try to aim at breakthroughs in technology. So instead of reduced rates, they may as well try to develop new capabilities that will eventually allow a player like PDO to optimize costs going forward. And another massive opportunity, which is part of a long ongoing discussion in this region, is revolves around developing local capabilities. In my view, that's only an opportunity if the rebound will really take longer than at least 2 years, because this is a very slow process. In the GCC, a lot of questions raised over local workforce, in the past decade, and most governments have set very ambitious objectives to embrace in-country value. In Oman, Omanization, has been embedded into the government's long-term vision, and altogether, we have seen a very important contribution from either South Asian or expatriate workers, into the growth of the region over the past 2 decades. So the big question remains is that with the restrictions in place on transportation, on movements, how some of these countries will be able to fill the employment gap. And to many of our clients, this really represents an opportunity to start developing local capabilities, step up their efforts to really develop a local talent pool, perhaps even strengthen the collaborations with local universities and educational bodies, and together, develop a local workforce going forward. So these would be the most important takeaways, but I guess at the moment, what all companies are doing, most of them, they take a step back, they try to collect data, they try to build new capabilities. And again, I can't emphasize this enough, especially in Oman and the GCC, expanding the talent base in the country is a massive opportunity, but not necessarily in the short term. That would take me to the next topic, unless we have a poll coming up, Sanjeev.
Peter, that would happen after this slide.
All right.
You could please go ahead.
Very good. Okay, great. Now, supply chain disruption and mitigation, the other massive challenge that has really occurred at a global scale. Now, what we have been seeing in the region is that certain segments of the region's oil and gas value chain, including EPC, is largely price sensitive one and operate on low profit margins with a heavy dependency on materials management, supply chain, workforce management, and various other economic parameters. So all these issues coming up these days, and all the companies are dealing with them. A key aspect is reinforcing efforts to build domestic supply chains and capabilities, since we have seen the sort of hit that the supply chain has taken only in the past 2 months. Now, we know that there is a very high dependence on affected regions and of course on China. Many of the oil and gas services companies amongst our clients seem to have realized that either their suppliers or sub-suppliers are based in the affected regions in China or Italy, Spain, or even in South Korea. So it seems that single sourcing or even sourcing from one single geography should be avoided going forward, but it's not that simple, of course. Just to give you an indication, of how severe the issue is, more than 5 million companies globally have tier 2 suppliers in the city of Wuhan in China, where the COVID-19 virus outbroke. And many other companies, even in the GCC, more than 50,000 of them have tier 1 suppliers in the city of Wuhan. So diversification is unavoidable going forward. Oman's equipment and accessory sourcing practices are, of course, also heavily dependent on China. What we have seen is that many companies, mostly services players though, they have started to rethink their supply chain strategies. This process has already begun for many companies. And it's fair to mention that Oman does stand out in this aspect in the region, purely because the country has started to take measures after the 2014 crisis, when GSRS, the Joint Supplier Registration System, was really introduced and brought to the market by business gateways. What we have seen, talking to some of the key executives over the past couple of years, is that oil and gas companies, thanks to GSRS, are really benefiting from an improved supply chain operation, and they are doing far more than what could be done. We are talking about a one-stop information source on local and international contractors, manufacturers, and suppliers as well. A single supplier pool, then more than ever before, embraces e-procurement, contract management functions, and allows online and digital business-to-business connectivity throughout these difficult moments. So initiatives such as GSRS, and some of the other steps that the government in Oman have taken allowed the country, in my opinion, to weather the storm despite the massive deficit that the government is facing at the moment. If you just look at the supply chains in the region, the GCC states have been pretty successful in terms of building up an oil and gas supply chain that's a bit more resilient and more suitable to withstand the crisis than that of their peers. And I'm particularly referring to Iran or Iraq, countries that whose supply chains will be exposed to several risks and coping with massive challenges going forward. So there are several techniques that are listed here. Again, these are some that our clients are trying to implement, going from supply chain mapping, basically trying to understand the needs of the Taiwan suppliers, trying to build out custom fit procurement processes. And some of them even started to get greater visibility into an extended supplier network, things that we have never done before, trying to get to know our tier 2 and tier 3 suppliers, and see how they interact with your tier 1 supplier. And of course, ultimately, many of the key executives emphasize the importance of embracing e-procurement. Now, most of the companies may not there be yet, but a system like GSRS definitely has unlocked the challenges, and we expect that it is that therefore that Oman will be able to cope with the massive challenges that are laying ahead. That would pretty much take me to some of the conclusions that we should be drawing, Sanjeev. So if you want to follow in a poll.
I'm just going to bring in one more poll. Thank you, Peter, for that. This is one poll which is applicable to this particular slide. To the audience, I'm just launching it for you. You should be able to see that on your screen now. This question is more to understand how many of you are interested in new opportunities across the GCC per se. Peter has given a very good word about the GSRS, and the GSRS has proved itself from 2014 onwards in Oman. But what we have done, Peter, is that we have expanded a little bit, I should say extended a little bit of our actions sitting right in Oman itself to feed the market with the opportunities that are happening across the GCC, especially tenders which are announced openly. So that's the poll that we have put up, and I think it has come to the end of the polling, and I'm just launching the results. Okay, so yes,
that's
a good
89.
Yes, it's pretty straightforward. Yes. 89% are interested in new opportunities. Yes, it's a strategic alignment to the upcoming business scenarios that we are looking around. All right, Peter, over to you again.
Very good. Thank you, Sanjeev.
The next slide.
That would take us to the last slide. Perhaps the most complicated one. Expectations going forward, as we discussed. It's hard to make long-term predictions. What we expect to see, what our clients expect to see, is of course continued uncertainty. Once the global economy stabilizes, there is no indication that growth won't return. As we know that the world still needs oil and gas, of course, not to mention the meeting needs of an estimated 1.5 or 2 billion people who will join the global population by 2050. Also, just looking at the prices, the economics of oil and gas extraction have improved considerably since the last supply shock in 2014, by up to $10 to $20 per barrel. And we expect that the break-even price will be higher than the price we are seeing through this dual shock, of course, with a lower ceiling than in the past. So it is because of this cycle that companies will have important opportunities to fundamentally reshape their investments going forward. As I mentioned before, we expect to see opportunistic asset purchases. That's certainly a tendency that we have seen in mergers and acquisitions in North America, and that has trickled down to other parts of the world. I would like to touch upon on the importance of some of the mergers and restructurings. Typically, the one of OQ in Oman, which has really brought together two of the largest entities in Oman's oil and gas industry, so OPIC and Oman Oil Company, and eventually integrates 9 Cree and massive subsidiaries going forward. This single entity in the country's hydrocarbon industry will, on one hand, enhance development of an integrated hydrocarbon value chain, in my view. And of course, we'll allow the company and these entities to double up their contribution to the country's GDP. Estimates say that from $20 to $20 billion. On the project side, globally speaking, prior to the crisis, we have seen more than 3,000 oil and gas projects announced for the period of 2020 and 2022. Almost half of them were related to expansion of refineries and petrochemical plants, so basically in the downstream sector. Now we know that many of these announced and planned projects, a significant chunk of them will of course be delayed. And that's also true for the Middle Eastern region, which has been hosting some of the most ambitious offshore technical offshore projects and LNG projects as well. My key takeaway from this would be that Oman over the past couple of years has really managed to announce a wide range of ambitious projects. At the moment, we are seeing commitments made from international oil and gas companies and operators, to move forward with projects. Shell has committed to a gas to liquid plant, which would be the second one in the region, of course, after Qatar. Total has committed to a bunkering, LNG bunkering facility. There have been a lot of talks about the long-term importance of the Duqm refinery, and the Duqm Special Economic Zone will obviously be an engine for many new projects to come. Speaking of some of the mega projects, Petroleum Development Oman has just finalized the Rabab Harwil integrated undertaking, which is known as the largest capital project in the company's history so far. And as opposed to many other major projects, either in the region or internationally, this one has come on stream ahead of schedule and well below budget. And we are talking about reserves of more than 500 million barrels of oil equivalent. So again, that's a good indication that Petroleum Development Oman has really established a culture of efficiency. It has learned to operate in difficult environments, and that's also because of the difficult geological conditions of the Omani blocks, and the heavy crude that Oman has been extracting from some of these blocks. So Oman really has opportunities to transform the Ras Markas terminal into an oil storage hub where oil is exported and imported and eventually traded. So opportunities are definitely lying ahead. We expect to see continued investments from some of the national champions, but measured investments. And that's in the case of, again, PDU, ADNOC, or Aramco as well. When we asked our clients, where they see massive opportunities lying ahead for Oman, they highlighted two areas. One would be for the country to continue its ambitious diversification program, although we expect a slowdown there. And frankly speaking, still at the moment, 45% of Omani exports, mostly oil, they go to China. So Oman could keep positioning itself as a facilitator on the value chain between China and the Western world. In this context, obviously there are plenty of questions that come up, and perhaps there would be opportunities for the country to dive into developing special manufacturing capabilities, either in oil and gas tools or accessories, going forward. The other massive area for Oman would be to take advantage of its geographical location. The country clearly has an export advantage over its Gulf neighbors, thanks to its export terminals lying outside the Strait of Hormuz, that congested oil waterway. And eventually going forward, the Sultanate can take advantage of its strategic location by the new refinery and additional storage facilities. The final question that remains to be answered going forward, what's going to happen to the green energy transition? A massive move that has taken place in the past year and in the past couple of years. We are seeing companies investing more and more into this. We have seen the UAE and Saudi Arabia announcing shortlisted bidders for ambitious renewable projects. Oman has set an ambitious target of 30% of its mix to come from renewables by 2030. Now, the future of green energy may remain in a limbo at the moment. So with gasoline prices so low, the pressure is maybe off to invest in alternative fuels. Although we expect that the projects that have been announced and that are ongoing will continue to take place. So, as a conclusion, overall, looking at the region, I would say that expansion at many of the region's low-cost gas and oil projects will continue, even with crude prices having slipped to around $20 per barrel. At this stage, it's probably not possible to say how long this phase of crisis will take. It's certain that the economic impact of the pandemic will take surely more than 6 months or even 1 year. And when the rebound comes, that will definitely be a new normal for the region and for the entire energy industry. I know I may have already overrun my allotted time, so that pretty much concludes my thoughts and presentation.
Thank you so much for that, Peter. I think we are pretty much on time because normally a few minutes this side, that side is always there. And thank you so much for that very a kind of message with a good clarity in that. You have thrown a lot of light on it. Now, there are a number of questions which have come in, and yes, there are quite a number of questions, but one particular question or one or two probably we could take up here on this. Combining a few questions together, I understand that what the audience is generally liking to know is that what could be the factors which would lead companies to come back to a business normality by 2022, 21 or 22. What could be the factors that lead to this, Peter, according to your view?
Well, look, in my opinion, there are several important factors. All companies seem to be highlighting one, which is, as I mentioned before, perhaps the need for new technologies and the need for operational efficiency within organization, to come to life going forward. So if we expect a rebound by 2022, that would give companies at least a year and a half to adapt to the new reality. Now, I personally believe that a rebound in terms of activities will obviously take place in the next couple of months. We are seeing restrictions being eased going forward. Of course, on top of that, we also expect that there may be a second and a third wave, unfortunately, of COVID-19. But I was also surprised to hear positivity, lots of positivities, in the feedbacks that we have received from our clients. None of them are considering getting out of business. They are very positive about keeping their businesses afloat, and they are, of course, reducing staff. They are reducing operational expenses. But what would make me believe that a rebound could happen in 2022 is that that would allow companies to diversify into new territories, into uncharted territories. That will take a bit of time.
Okay, thank you for that answer, Peter. Now I'd like to invite Hemant, the CEO of Business Gateways, to offer a few words on his view about the current event and the situation. Hemant?
All right, thank you, Sanjeev. Peter, that was a really amazing presentation, quite insightful, I must say. And since we are already running short of time, I'll try to make it short and sweet. Ramadan Kareem, by the way, to all of you. And I know it's the holy month of Ramadan, so all of you would also be a little tired. So we'll try to make it and wrap up at the earliest. Yeah. So looking at the JSRS at this particular point, we are holding one of the massive mandates in the country in order to ensure that there is a smooth procurement system operating, like what Peter was mentioning. We have thousands of 9,000 plus suppliers on board, and we have billions of dollars of contracts going through this particular platform at this moment. Come this COVID-19, what has happened is obviously our focus is to ensure to address a particular concern related to the supply chain disruption. We want to make sure, yes, there would be a supply chain disruption. We understand that, but we are scrambling to support both the operators, the oil and gas operators, the main contractors on the buyer side, vis-a-vis that of the supply side, to minimize this particular disruption. And we have taken a lot of steps in order to support the suppliers, and also to go into a deep listen related to the operators, because we need to understand from the buyers to figure out what's their strategic shift, what are they thinking. And yes, like what Peter was also mentioning, there is going to be definitely a strategic shift. So we need to be absolutely on top of it. And once we are able to summarize this, once we're able to digest in the directions that we are going, we should be able to align our suppliers accordingly and support them on that. So all this COVID-19, well, it's obvious no one saw this coming. It's hit us overnight, and it has hit us fast at an unbelievable speed that we never could even imagine. All along, we were thinking it's an isolated incident somewhere way down in China, but today it's at our doorstep. So, having said that, I mean, I'm sure that all of us, even though we are working from home, we face an onslaught of information on news feeds, and you name it. You change any channel, there is something happening in terms of information of where it stands, whatever. But it's not that the whole thing is like in a doom and gloom model. Like what Peter was mentioning, there are a lot of positivity to this. There are a lot of opportunities that are hidden within this particular model. We are right now in a phase what I call as a shock and hibernate. We are all shocked, both from from a health perspective and from an economic livelihood perspective. We are in a shock. We are all in a shock. We have all scrambled back into the safety of our own confines. But at the same time, we are also hibernating. And this is the time for us to do a serious level of listening. This is the time for us to understand and try to get that day-to-day shift of what's going on in the whole world, and try to make sense of it all. And soon it's going to come into an awakening and a realization phase as well, where you would need to realize that there is no short-term answers, or there is no astrological answers to say it's going to end in a month or 2 months or 3 months, whatever. Yes, one game changer is the vaccine, which we are all hoping to God that something comes up ASAP. But having said that, even with the vaccine on board, the so-called new normal that we are all talking about is going to continue for years to come. And we have to be mentally realizing this and accepting this very clearly within our minds. In fact, if at all we are going to go through and survive on this model. Next phase would be in terms of the adaptation to the new normal, where companies will have to strategize, companies will have to adapt, companies will have to figure out ways and means in which we can actually take this into the next level that is there. And finally, we may reach a point where we are talking about business as usual mode, obviously aligned to the new normal. So what this new normal is, it's too early to say. It's too early for us to even make sense of it all. We have to wait and evaluate and understand what is this world's new normal going to be, and how does that impact me, and how do I fit myself into this new normal aspect of it. So a lot happening all around us, as we know. From Oman's economy, I just want to quickly touch with what Peter was mentioning. Oman has gone through a double whammy now in terms of the fallout of the oil prices and the COVID. The good thing is the government has woken up to this, and they're trying their best to ensure that initially there was a shift after that oil price crash sometime back. The government decided to go beyond oil and start a strategic role towards the non-oil dependence model. And that's where tourism and things like that were really given a lot of impetus, tourism, logistics, and you name it. What was happening now is because even those sectors have taken a broad hit, and together with it, because of the oil glut that is there in the surplus, the demand on the oil, the government had actually set up a deficit at about 6.5 billion, I believe, and of which now I think almost 1.3 billion, that's around 500 million reals, have already gone into a spend cut plan with the government spending that is kind of coming on board. So they're trying to adapt. They're trying to bring this out. The good news today is we have the lockdown, which was there for almost a month. Today they have opened up some of the basic sectors, the services sectors, like the workshops, the small computer trade shops, the micro and the levels of small companies who really are desperately looking at sustaining themselves. The great news is that the government has enabled them to go ahead, and I believe that we can see a planned ramp up of that particular business that's happening. So with all this particular gloom and doom, a couple of days ago, I was surprised to see on CNN, they had informed that the Pentagon has sent up a declassified information on UFOs. So you could see all the flying saucers going all over the world. And I was like, no, this is the wrong time for this to come. We have enough on our heads already. So there's a lot of perception issues going on, a lot of perception issues. And I think the survival model is what is currently holding on. Will we survive? Will we be able to ride the storm and take it forward? Yeah. So let's just hang in there. Operators are actually looking at 20% procurement cut as a temporary basis. We are believing that there could be a procurement slowdown of almost 20 to 25% right now. Not with everybody, but this is what we believe that could happen. Alternate supply sources are being really looked at. So this is where I think companies can really come on board. If you guys have something seriously and powerful enough to support the procurement of Oman, you're most welcome to come on board. Contracts could also be renegotiated as we kind of go it forward. Supplier side, what we are aiming to do is, I believe that we have a lot of GSRS suppliers today who are attending. We have enabled on the GSRS a very strategic initiative which is related to building up a supplier readiness form, which helps you to highlight to the oil and gas community and to the ministries on how ready you are and how are you planning to mitigate the current situation. And I strongly urge and request all your suppliers who are already certified on the GSRS to go in and start filling it up and understanding how it's basically possible for us to support. And we'll come back to you once we get some good feedback around that particular part of it. So that's the whole thing, and it's also very critical at this moment to look at B2B. To please understand that Oman's the local content, like what Peter was mentioning, is very strong and very focused and very serious. So international companies, like anybody who's wanting to come into Oman, will have to consider very strongly to support the local organizations, support them, Omani companies, to ensure that there is a clear knowledge transfer, capability, support, and even capacity building models to be put in place. And I'm pretty sure that you will understand this as we go into the Oman's economic review. So yeah, that's where I believe from my side, I just wanted to take to be given to you all on that. Not taking much of your time because I could go on talking forever. So thank you so much, Peter, once again, and Sanjeev, a great job by your side, and all of you. Let's be safe, and let's hope that we are able to learn from this and understand what is the meaning of this business continuity that we need to place as a priority during the coming years as we move into our business as well. Yeah. So
thank you, Herman.
Thank you, Hemant. Just one quick word before I wind up to the audience. We have got a lot of questions from you, and those questions which are relevant to the JSRS, our team in the backend is replying back to you. And in the event it's still not answered, these questions would be compiled and sent across. But there's a number of questions which have been directed to the speaker of the event today, to Peter Szabadi. Now, those questions would be taken on and sent to Peter to get his views of how the whole thing is to be approached. And once we get those questions, we will combine all this together as a Q&A of the event. And hopefully within a week's time, you should be able to get the things into your registered email ID. So I thank the speakers, both Peter and Hemant, for giving your views on this. And I thank the audience for taking the time to come in and join. I know, yes, as Hemant mentioned, it is a Ramadan time, but thank you so much for having taken the time to come over. And as usual, we are always here to support you. So once again, to the speakers and to the audience, thank you so much.
Thank you very much, Sanjeev. And on behalf of the NRGA, we also wish everyone health and safety, and we look forward to continuing conducting productive and value-driven discussions with many of you out there. Stay safe.
Thank you, Peter. Much appreciated. Thank you.
Thanks, Peter.
Thanks,
Thanks, Sanjeev. Bye-bye.
Thank you. Bye-bye.